Gaurav Dua, seasoned hand in the market, is joining us now. Of course, now he handles ShareKhan's PMS, the Portfolio Management Service, the fund, and is joining us on the show. Gaurav, thank you very much for your time. It was so interesting to see that a chemical name actually appears in top of the list in your recent entry. And we here on ET Now and ET Now Swadesh have been, kind of scratching that point almost for a month now, that perhaps the 3-4 year correction in the chemical names may be coming to an end. I want to understand, why did you add chemical in your name? If you can talk a little more about that company, well and good, but that's okay. Otherwise, you can share why there is merit to look at chemical stocks once again.
Sure. So, I think the time has come where I think, selectively start buying into this space. What we have seen that after the super normal profits that some of these players have seen in 2020 and 2021 because of the supply side issues. Last 1 to 1.5 years was this pretty bad. However, what we see now is that the RM prices have stabilized, finished goods prices have also like stabilized, but still in this space, we would try and avoid the commoditized players and would rather go in for specialty players. And the stock that we have bought in our this thing fund in last few months is this Gujarat Fluoro. Because the stock had come down from its peak this thing sharply, and and we see a very very healthy growth there for next 2 years.
Interesting. Gujarat Fluoro is up 2.5% in trade. Are you is just that name fluorine-based chemicals which you're bullish on, or are you analyzing other names as well in the space?
So within that space, fluorine space that we like, the Gujarat Fluoro is more this thing attractively priced. Number one. Number two, it was dragged down because of some issues, concerns, which were linked to the related party loans, which again has been addressed now to a large extent. So we believe that this stock within that space has a lot of scope for upside.
I also want to understand your view on private banks. There is a name which is slated for earnings Saturday, ICICI Bank, HDFC Bank just got over. Is the growth and the best of private banks yet to come, or it is now slightly getting baked in already?
So in within that space, we for past 2.5 years, 3 years have been extremely bullish on the ICICI Bank because the valuation gap at that point of time between ICICI and HDFC Bank had become huge. However, in past few months, we have started trimming down our exposure to ICICI Bank, and we think that there is a scope for a better upside now in this HDFC Bank and also also is a Kotak Bank. So what we are doing is that within the private banking space where we like the space anyway, we are making this in some kind of investments there.
What else is interesting you right now at current levels, Gaurav? What have you been researching?
So what we think is that the bigger this thing picture for India and for the Indian equity market is extremely good, and these kind of 1.5 year of a phase where the stock markets haven't done much offer a lot of opportunities. So in last week of March, we actually came out with a strategy note where the market was around. Extremely oversold, that had slipped below the 17,000 mark on Nifty. And these kind of this thing levels we believe are extremely attractive. And that is where what we wrote in our strategy note that you can't wait long. This is the time to buy. And what we had thought that it will play out in a month or just in 2 months, but the upside has been sharp. However, we believe from here also for next 2 to 5 years, there's very big opportunity in spaces like this in banking. I think once you start seeing interest rate cuts, which might come in 6 to 8 months, according to us, I think NBFCs will also start outperforming. Other than that, the this thing, capital expenditure or the capital investment from the private sector is there to stay, and there are a lot of stocks in the engineering space, capital goods space, this in which we like. And lastly, India has always been a consumer spending kind of a market, and that space from 2 to 5 years kind of a period look extremely good to us.
Right. Gaurav, you seem to be bullish on the real estate cycle, the start of the second phase. The real estate stocks have halved from top. Do you see value there as well?
So yeah, if you have gone into the aggressive part of the real estate space, yes, they have gone down by 30-40% plus. However, if you look at the larger good names of Reality of the world, DLFs of the world, they have been more stable, though they also came down by 20 odd percent in this fall. And that's a space what we like. We have like added there in this past few months, and we believe that the next this phase of upcycle is there.
What are your thoughts on small caps? Because small caps are kind of. Do you think the froth is out from small caps now, and on a 2 to 3 year basis, even small caps can be a good area to chip in?
So mid cap and small cap is a very large space. But if you see in past 2.5 decades, what we have seen is that we have a one-way upside in mid cap, small cap, which lasts for on an average for 18 months. So a small cap, mid cap peaked out in India somewhere in October 2021. And post that one way kind of a rally, you see pain. That pain can last for anywhere between say 1 to 2 years. So we believe a large part of that pain is already done. You can't actually time it. However, we think that this is time to gradually increase exposure to small cap and mid cap. However, it's not necessary that same stocks which did well in last small cap upcycle will do well now also. You need to do your homework well.
Gaurav, how convinced are you that in the second half of this year, the rate cut cycle or early next year, rate cut cycle actually will start in India? And also it will coincide with general elections. How would market price all of that in?
So yes, in next few months, you will start looking at inflation, this thing numbers which will look good. Last year you had this Russia-Ukraine, this thing conflict which broke out in somewhere in March. And in April, May, June, you got a higher base because you had the surge in crude oil prices, this natural gas, and all other this kind of just commodities. Now with that high base and a lot of these prices stabilizing now, so the next few months you start seeing inflation numbers actually looking very good. Wholesale, this inflation number, if you see, they have already gone down in past 1 year from as high as 16.6, 16.8 range. Now they are down to around this 4%. And the retail inflation numbers will also go down, follow. And this will make a very strong case for the interest rate cuts, especially since we are already seeing some kind of slowdown in the spending also. So I think there is a strong case that RBI might stay at these kind of rates for next 4 to 8 months, and then there could be start of a interest rate cut cycle.
If you look at this market right now, On the one hand, we are seeing FI outflow may have reduced but not fully over. On the other hand, the domestic buying has been very good. Do you think that if the market remains in a narrow range, there is risk to domestic buying, or you think that the worst of that fear is already out?
So a lot of these domestic buying is now like this is structural in nature. So the SIP flows, if you've seen, and during this entire phase of a this down cycle has been more or less steady. So I don't see a huge risk to the inflows on the domestic side. On the FII side, what we have seen is that selling pressure is more or less done. And due to this banking issue which had cropped up in US and Europe, suddenly the this thing liquidity taps by the central banks have been this thing opened up again, and that is why you see some of these markets like CACs and DAX, they are at new high. US is also moving closer to their all-time high. Technology stocks which had really faced the selling pressure in 2022, like Apples of the world, Teslas, Amazons, they have bounced back pretty distinct sharply. So basically, a risk off is this thing already quite reflected in a lot of these areas. And I think this is the good news for emerging markets, also India. So I'm not so pessimistic, and I don't believe that the kind of selling pressure that you had in 2022 uh, uh, that you will see again now.
All right, Gaurav, we'll let you on that one. Thanks so much for chatting with us about your stocks.